Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a sharp fall in American consumer credit demand. But first, yesterday, New Zealand was the centre of interest rate news with a surprise 0.5% rate cut. But two other central banks also cut rates yesterday. India cut theirs from 5.75% to 5.40%, and Thailand moved down 0.25% to 1.5%. The India move was regarded by markets as timid. The Thai move was more of a surprise, but taken in the trade and currency war context, they were worried about the strength of the Thai baht. The latest data on world trade, however, is not encouraging. In the US, orders for new trucks, which were running at a record high in 2018, are now reversing fast. Orders for big rigs fell in July to their lowest level since 2010 as freight market demand scales back quickly. International air freight demand is falling, and the pace of the drop is picking up. The latest data for July shows it down more than 5% from the same month a year ago, the 8th straight month of declines. In the Asia-Pacific region, this data is almost 6% lower. In North America, it's down 7%. Wall Street is 0.5% weaker today, although overnight European and Asian markets pretty much marked time. The US administration's attacks on the Fed is being seen as cheap blame shifting and not dealing with key economic issues they need to address. Bond investors are increasingly concerned, and the closely watched 3-month 10-year yield curve is now more negative at 35 basis points. Markets are also getting to understand that the Chinese ability to depreciate their currency is a force the US can't counter. Worse, they now understand that even if the Chinese leave their currency to market forces, as the US insists, the yuan might actually weaken even faster. It's an own goal by Washington and is a tension that will be around for a long time. Not only is international trade turning lower, but US consumer credit demand is as well. Their June data has come in unexpectedly weak and $1 trillion lower than markets were expecting. For months we've been reporting the rise of the iron ore price, but overnight it has suddenly turned and sharply. It's down more than 5% in one day. US Treasury 10-year yield is sharply lower yet again, now at 1.69% building on earlier weakness. Gold is up to over $1,500 an ounce, in fact up $30 today to $1,502 an ounce. That's the highest it's been since April 2013. US oil prices are taking another thrashing today on demand fears and are down almost $2.50 a barrel. They're now just under $51.50 a barrel, and the Brent benchmark is under $56.50 a barrel. Both are huge moves overnight and add to recent weakness. The Kiwi dollar starts the day softer at 64.6 US cents, more than a half-cent drop since this time yesterday. On the cross rates, we're down a whole cent to 95.5 Australian cents. Against the euro, we're similarly softer at 57.6 euro cents. That sets the TWI at 69.7. I'm David Chaston. That's 90 at 9, brought to you by interest.co.nz.